$8 trillion. Not over a decade. Not through growth. Not through crisis response. $8 trillion moved quietly, deliberately, and structurally in less than 2 years. That number is larger than the total annual output of most nations on Earth. It rivals the economic footprint of entire empires at their peak. And it was not moved to make money. It was moved to survive what comes next. This is not a theory. This is not speculation. This is not a warning about what might happen. This is about what will happen. Because systems of power do not collapse randomly. They collapse in sequence. They collapse in stages. And once a system reaches a certain point, reversal is no longer possible, only delay. China has crossed that point. Not loudly, not publicly, not with speeches or threats. Quietly. While attention stayed locked on interest rates, elections, and headlines, a deeper shift took place beneath the visible surface of the global economy. Assets were repositioned. Trade routes were rewritten. Dependencies were recalculated. Exposure was reduced. Leverage was increased. Mainstream analysis missed it because it wasn't designed to see it. This move does not look aggressive. It does not look hostile. It looks boring, technical, administrative. That is why it is so dangerous. History has seen this before. Empires do not announce economic war. They prepare for it. And when preparation is complete, outcomes become mathematical. By the time markets react, the structure has already changed. By the time policymakers respond, the leverage is already gone. By the time the public understands, the cost has already been assigned. And you are already late. Not late to watch, late to react, because the shift already happened. What you are about to see is not a prediction. It is a pattern, a sequence that has repeated across centuries, across currencies, across empires. Britain before the First World War. America before Japan's rise. Europe before the energy shock. Different actors. Same structure. Same stages. By the end of this report, you will understand the pattern. You will see the stages. And you will recognize why the world is no longer at the beginning of this cycle, but near its end. Those who see the pattern adjust their position. Those who don't become part of the collapse. History doesn't repeat. It rhymes. But the sequence remains. Every major economic conflict follows the same multi-stage pattern. Not because leaders copy history, but because power, leverage, and incentives always resolve the same way. This pattern has 4 stages. Not opinions. Not narratives. Stages. Dependence creation. The first stage is always cooperation. Trade expands. Supply chains integrate. Capital flows freely. This stage is sold as stability, as peace, as globalization. But economically, it is something else entirely. It is dependency engineering. One side becomes efficient. The other becomes reliant. Cheap inputs. Outsourced production. Financial integration. At this stage, everyone believes conflict is impossible. Because conflict would be too costly. That belief is the trap. Britain believed Germany needed its markets. America believed Japan needed its oil. Europe believed Russia needed its customers. They were all wrong. Because dependence does not prevent conflict. It enables leverage. The side that controls production, processing, or infrastructure does not fear disruption. It plans for it. Why people don't notice stage 1? Because it feels good. Prices fall. Growth rises. Markets reward efficiency. Politicians celebrate trade deals. Economists publish models. Media calls it progress. But power quietly shifts. Production moves. Capabilities concentrate. Alternatives disappear. By the time concern emerges, rebuilding is no longer cheap or fast. China spent decades here. Manufacturing, processing, logistics, rare earths, energy, refinement. This was not accidental. This was preparation. Asymmetric exposure in the second stage. Integration becomes imbalance. One side can endure disruption. The other cannot. This is where financial assets matter. Who holds whose debt? Who clears whose payments? Who depends on whose currency? China studied this phase carefully. They watched the U.S. freeze assets. They watched sanctions weaponized. They watched payment systems become tools. And they adjusted, gradually, quietly, reducing dollar exposure, increasing gold reserves, expanding yuan trade settlement, building alternative payment rails. Not to replace the system, to function without it. Why this stage is misread? Because nothing breaks. Markets still open. Trade still flows. Currencies still trade. Analysts say nothing has changed. But mathematically, everything has. Optionality has shifted. One side can walk away. The other cannot. That is when leverage becomes real. Strategic repositioning. This is the most dangerous stage. Because it looks like routine management. Assets are moved. Exposure is reduced. Trade routes are diversified. But scale matters. $8 trillion is not diversification. It is re-architecture. At this stage, the dominant power still believes it controls the system. But control is no longer centralized. Parallel systems exist. Buffers are built. Shock absorption is planned. This is where China is now. Not confronting, not challenging, bypassing. History shows that once Stage 3 is complete, outcomes become inevitable. Britain lost financial primacy before it lost military dominance. America underestimated Japan's economic insulation. Europe ignored energy leverage until supply vanished. The mistake is always the same, confusing visibility with control. Why Stage 3 is invisible? Because it uses spreadsheets, not speeches. Because it happens inside balance sheets, inside reserves, inside settlement systems. Media cannot dramatize it. Politicians cannot campaign on it. So it goes unnoticed. Until it doesn't. Controlled disruption. This stage does not begin with collapse. It begins with pressure, supply interruptions, currency stress, market volatility. Narratives blame accidents, weather, politics. But the structure has already changed. Shock transmission is asymmetric. One side absorbs it. The other amplifies it. This is where systems break. Not all at once, but in sequence. Currencies first, then credit, then trade. History has already answered how this ends. Historical parallels. Britain entered Stage 3 before 1914. Germany understood it. Britain didn't. America ignored Japan's insulation before Pearl Harbor. Europe ignored energy dependence before sanctions. Different eras. Same blindness. Media focused on headlines. Economists focused on models. Power shifted underneath them. China learned from all of it, improved it, and moved early. Where we are now, the world is not in Stage 1, not in Stage 2. We are late in Stage 3. That is why volatility is rising. That is why coordination is failing. That is why old tools stop working. The system is still standing, but the load-bearing structures have changed. And when Stage 4 begins, explanations come too late. The final stage does not announce itself. It never has. There are no sirens, no official declarations, no moment where a voice calmly explains that the system has entered its terminal phase. Instead, there is a shift in behavior. Markets begin to move without clear reasons. Currencies react faster than policymakers can speak. Supply chains stretch, then thin, then snap in isolated places that appear unrelated at first. Most people will say this is volatility. They will say it is temporary. They will say it has happened before. They are correct about one thing. It has happened before. And every time, the majority miss the moment that mattered most. History does not collapse in one dramatic instant. It tightens. Then it fractures. The final stage is approaching because the prerequisites are already in place. The buffers are built. The dependencies are mapped. The exits are prepared. What comes next is not chaos. It is execution. The mistake people make is assuming collapse means disorder. In reality, collapse at this level is controlled, asymmetric, and selective. The system does not fall evenly. It falls where pressure is highest and flexibility is lowest. That is why most people never see it coming. They are looking for explosions. The real damage happens in spreadsheets. Why most people always miss this phase. The human mind is not built to recognize slow, structural failure. It is built to respond to events. A market crash, a war, a default. But this phase does not start with events. It starts with constraints. Liquidity becomes conditional. Trade becomes politicized. Trust becomes selective. Nothing is officially broken. Yet everything is harder. Credit costs more. Hedges fail. Insurance disappears. At this stage, explanations dominate the media. They argue about inflation versus growth, politics versus policy, external shocks versus internal mistakes. These debates miss the point. The system is not malfunctioning. It is transitioning. And transitions at this scale are never painless. The comforting lies that always return. Every cycle produces the same reassurances. This time is different because markets are more sophisticated. This time is different because institutions are stronger. This time is different because everyone is too interconnected to fail. These statements sound rational. They are always wrong. Interconnection does not prevent collapse. It concentrates it. Sophistication does not remove risk. It hides it. Institutions do not stop structural shifts. They manage narratives while leverage moves elsewhere. The most dangerous lie is the belief that the system will protect those who trust it. History offers no such guarantee. The Roman currency system protected Rome until it didn't. The British pound anchored the world until it couldn't. The gold dollar system promised stability until it broke. Every dominant system lasts longer than expected, and then fails faster than imagined. The time window, there is always a danger period. Not a single date, not a countdown. A window, a span of time when stress exceeds resilience. During this window, small shocks produce large effects. Markets react violently to minor signals. Confidence evaporates faster than liquidity. This window does not require a trigger. It only requires pressure. Debt levels are already elevated. Supply chains are already strained. Geopolitical trust is already fractured. That is why the window exists. And once it opens, it does not close cleanly. First, contrary to popular belief, governments are not the first to fall. Markets go first. Prices stop reflecting reality. Volatility stops being contained. Liquidity retreats without warning. Currencies follow, not through sudden hyperinflation, but through credibility loss, through reduced usage, through bypassing. Then supply chains. Not total failure, selective disruption. Critical components. Energy flows. Transport choke points. Each failure reinforces the next. Feedback loops form. At that point, policy responses lag reality. They always do. History divides people into two groups at this stage. Not rich and poor. Not powerful and weak. Prepared and unprepared. Prepared people understand sequences. They do not wait for headlines. They do not trust reassurances. They observe flows. They watch reserves. They track settlement behavior. Unprepared people wait for explanations. They look to authorities. They expect stability to return because it always has. Until it doesn't. The tragedy is not that collapse happens. It is that the warning signs are visible to anyone trained to see them. It feels different because it is quieter. There is no single villain. No single crisis. Responsibility is diffuse. And that makes accountability impossible. By the time consequences are clear, decisions are framed as unavoidable. They had no choice. There were no alternatives. This was unforeseeable. History disagrees. It was always foreseeable. Responsibility shifts here. This is where the narrative changes. Up to now, this has been explanation. From here forward, it is responsibility. Not responsibility to panic. Not responsibility to react emotionally. Responsibility to understand where you are in the cycle. Responsibility to stop assuming protection. Responsibility to stop trusting permanence. Systems do not care about belief. They respond to structure. And the structure has changed. The coming shock to Western markets will not feel like an attack. It will feel like a realization. A moment when assumptions fail simultaneously. When diversification does not diversify. When hedges do not hedge. When liquidity does not appear. That moment does not end the system. It reveals it. Reveals who planned, who adjusted, who assumed. China's strategy is not about dominance. It is about insulation. And insulation determines survival when pressure rises. This report is not a call to fear. Fear clouds judgment. It is a call to awareness. History has already run this experiment multiple times. Across centuries, the names change. The currencies change. The technology changes. The sequence does not. Those who recognize the stage adapt. Those who deny it become part of the outcome. The system will not warn you when it enters its final phase. It never does. By the time you feel it, you are already inside it.